Welcome back to another episode of Friday Financial. And today we're joined by Dane and Lisa from our loan servicing department. Guys, thanks for hopping on today. Appreciate it.
Thank you.
Thank you.
We want to talk a little bit about an unfortunate event, and that is if you're in a car accident and your car is totaled, which unfortunately does happen. So the first question I think that probably comes to people's mind is, do I need to still pay my car loan if I don't have this car anymore because it's been totaled?
So unfortunately, you are responsible for paying your loan until it's completely paid off. There are procedures that we go through in order to, help with the procedure of paying off the loan. But until it's actually done, you should be making your regular payments.
Okay, fair enough. That makes sense. So if this happens to someone and they do total their car, should they reach out to their lender?
Yes, I would tell them to reach out to the lender so they can note the account. And then when the insurance company calls, they can already have, the information on their system.
So you mentioned insurance. So how does that work? Like, what does that process look like with the insurance company? Is the person involved, or does it all go down between the lender and the insurance? What does it look like?
Well, the person will contact their insurance company, and then the insurance company will look at the policy and see how much they owe, and they will reach out to us.
Okay, the insurance company will.
Right, exactly. So the member or the person does not have to do anything but contact the insurance company, and then the insurance company and the credit union will speak to each other, and we would then notify the member exactly what they needed to do after that.
Gotcha. So after this conversation, what happens if whatever the insurance pays out doesn't cover whatever is still left on the loan?
Well, hopefully they have gap. So that's a really good thing to have. If not, then there is options to roll the balance into the new loan that you get.
Okay. And you mentioned gap. So talk just really briefly about what does that mean?
Gap is insurance that is taken to cover any sort of balance after the loss. Gap doesn't always cover everything, though. It tends to not cover the deductible, late fees, prior payments, and any sort of warranty refund.
Gotcha. Yep. And you just mentioned rolling the loan into a new car. So the person can go out and get a new car and apply for a new loan, right?
Yes, absolutely. So essentially you would apply for a loan, and as long as there's, as long as they are approved, then that's totally fine. There's nothing that would keep them. Obviously we run the credit and everything like that.
Right.
But yeah, they can certainly take out a new loan, and then they can also, obviously they can let us know what's going on, that they did suffer a total loss. And if they're not owed any more money, then essentially they can roll that in there.
Okay, perfect. So I don't know if this ever happens, but what if the insurance company actually pays out more than what you still owe on the car?
It does happen quite often. The insurance company is responsible to pay the lender first, and then anything left over, the insurance company will usually cut a check to the member.
Okay, and the member can put that towards their new car or whatever.
Yep.
Okay, awesome. I think that was all of our questions for today. Do you guys have any last minute thoughts before we sign off?
I think mine is just communication. Just make sure you communicate with the insurance company and the lender to make sure everything is falling into place.
Okay.
That's what I would suggest.
I would just suggest, gap insurance is a good idea.
Yeah.
So if the insurance doesn't cover it, that it'll make up the difference. Well, like Lisa mentioned, there's certain things it won't cover, but it definitely helps.
Right. Awesome. Well, thank you both for hopping on today. I appreciate it. And we'll see you again soon.
Thank you.
Yeah, thank you.
Take care.